Patience. It was said that back in the day, patience was considered, a virtue basically because you had women who had to stay at home and mind the chores and mind the kids day in and day out while the husband had to go out and do whatever it is that he did for work, which might have been seen as a more exciting or more as adventurous or whatever have you. So you had, for example, this idea of patience being taught. Hey, be patient, good things come to those who wait, just as a way to keep them kind of motivated and say it's all right to not be super stressed out that you can't go out and so on. But more and more these days, you look at things like TikTok, you look at things like Vine that came before that, although that was quite early on. You look at Reels on Instagram, and you look at basically shortening attention span, where it's hard sometimes to just sit through like a movie for an hour and a half. And I have to say, in this day and age, patience is actually a superpower. If you're able to cultivate that, you are, I think, able to gain rewards above so many other people around you who just want that quick hit. So thank you all for having that patience. If you've been sticking around, hopefully you're being rewarded. As you can see, 8 days of rallying in this market, phenomenal, as we are ending what Trust Nodes calls the longest Bitcoin bear market ever that has ever happened. And take a look at this headline right here. Bitcoin ends the longest bear market. Bitcoin has risen above $18,000, while Ethereum took $1,400, raising speculation that the bear is coming to an end, at least the worst of it. This has been the longest bear market in history, lasting 425 days, just over 2 weeks more than the 2014 bear. And no, I'm not going to pay for more access to that article. I think we got the general idea. But point is that I think, and as we've said before, this was going to be rewarded, this kind of patience. And so long have you guys been patient just with the show, right? Like sometimes these long intros while we wait for people to come in, or just waiting for the news to turn around. So thank you all thank you for being you. It really means a lot. And it would be a super huge help if you could hit that like button if you enjoy these streams. We're going to get into the news and what's going on. And remember to subscribe if you're new to the show. I've been covering this since 2016. I think June 2016 was when I did my first video on Ethereum, and have had a blast. Sorry about that. Wallace, you have to keep it down if you're going to be in the room, or you're going to be banned from the show too. Kiwi the bird got banned from the show. Wallace, you're going to get... Okay. Thank you, bro. Patience. Anyway, what was I going to say? Oh, yeah, remember to subscribe. That would be super awesome. So I wasn't able to do a video the last few days as a bit of an update. I had to deal with kind of the repercussions of my mental health issue that resulted in me deleting my channel. I had 120,000-ish subscribers at the time, and I deleted it, but I did a lot more. It actually led to me having to spend a night in jail and go to court and deal with a lot. And finally, that was dismissed and let go, thank God. 2 days ago, I had to go back to Los Angeles to deal with that. So a super huge blessing. Yesterday, I had crazy flight delays because of what happened with the FAA. They had to shut down, I think, all the flights in the U.S. for the first time since 9/11. So anyway, we're getting back into it. We're back into the groove is my point, and hopefully headed in a better trajectory here. But I will say it's very dangerous being in a bear market, taking nootropics, dealing with crypto and stress and YouTube itself. A lot of that kind of was pressure I put on myself, I guess you could say, and it built up over time, and it led to a situation where I was just completely detached from reality, like psychosis, like genuine psychosis, having crazy delusions. I don't even know, maybe borderline hallucinations, but it ended up with me even in a mental hospital for like 3 days involuntarily, and being put on antipsychotics, and just a giant roller coaster that happened, then having to relaunch the show. It's been so much, but I'm super indebted to you guys who've stuck around through all of that. And I think now there's a way firmer foundation. I've learned a lot. I think my morals have changed a lot. And I just want to be here for you guys, as I've said again. So your support continues to mean so much. And if you can continue to share the show so we can grow back up again someday, that would be super helpful. I would like to be here for you in as long as I can. I still think it's early days in crypto. Anyway, that's enough of my rant for today. And let's go ahead and get into things with the prices. So we have Bitcoin up. Actually, let's go ahead and refresh here. Yeah, same. Bitcoin up 8%. It looks like it wants to breach $19,000. That's quite insane. Just south of that at $18,125.66. It's up 12.3% over the last 7 days. Ethereum is laggard a little bit. It's up still 6.6%, however, not as much as 8%, but not bad. Up 13.9%, stronger than Bitcoin actually over the last 7 days. The biggest performer over the last week has actually been Cardano. So people who have been expecting that it would die before the next bull market, if it is the case that we are entering the bull market, then I guess those hopes are being thwarted and shattered right now. Cardano is showing its strength. It's up 23.7% over the last 7 days, up 4.8% over the last 24 hours. So maybe some of those gains are slowing down here. There's all sorts of stories that you can talk about here, and that's just some of the excitement I think that's starting to show its face as people are generally turning a little bit more bullish. You still have plenty of bears out there, which to me is rewarding. It's to say that you're still quite early here. There's a lot of money in the sidelines. I'm sure many of you, just in case, and that would be the wise thing to do, don't have all your eggs in one basket. Don't have all your money in crypto at this time. Although usually that's the smartest thing to do at the bottom of a bear market. I think people are still waiting for more confirmation. There are plenty of folks that are thinking we're still going to hit another huge downside, that we were going to be getting even more downside actually today. And what we were seeing was a huge bear trap. And that this was because people were expecting that people were becoming too excited about inflation expectations. So in November, inflation was up at 7.1% as being reported, whatever, CPI. And the number was expected today to come out lower than that. But people were saying if it doesn't come out lower than that, the market is pricing itself for failure. It's going to be devastating. What are the chances that it does that? Maybe not so likely. In fact, we did drop lower than 7.1% as we just got the numbers, and it's down at 6.7% inflation rate, which means that the Federal Reserve might not even need to continue to hike 50 basis points the next time as much as they did in December. And this is opening it up to the potential that they only have to raise basis points for interest rates 25 basis points, which is less hawkish, which would be good for risk assets. And so that's part of what's driving the continued market rally today. But as I've said, Bitcoin has been rallying for about 8 days. It has not stopped. I think cryptos were getting ahead of this. It's been, again, a long bear market, and things have always traditionally turned around. That's what I had said on Twitter in a response to someone. Like, bears are generally over long term have always been on the losing side here. That's why it's risky to short Bitcoin. It's risky to bet to further downside, because history has always showed that cycle and cycle number always go up. And that's, I think, in line with what you see with inflation. I mean, it's just like Joe Rogan had said, right, that there's so much money hidden in the world that there are actually trillionaires, he had said on the show. If you're looking at the amount of money that Saudi Arabia pulls in, some of these oil moguls pull in on the daily, billions and billions of dollars, it's not hard to imagine how there could be trillions of dollars that don't have to be reported. They don't have to report their wealth. And so imagine just like one of those comes out there and decides he wants to, I don't know, control the crypto market some ridiculous amount, which I don't think is a good thing. But let's just say he decided to dump $1 trillion into this. We aren't even at $1 trillion market cap for overall cryptos here right now. Although we are up nicely, we're up 5.1% on the day. We're up at $947.577 billion, so almost $1 trillion. Not bad. So anyway, my point is, money continues to get printed like crazy. Likely even percentages of that, small percentages of it entering crypto will pump things higher. It's been a long bear market. People are getting antsy, and this is going to be a great place to be. People who are getting ahead of that are being rewarded, and so hopefully you're going to be one of the big beneficiaries here. But there's still, like I was trying to say, plenty of money on the sidelines that you have that is slowly going to become more confident, ready to get into this. And I think that's the case for regular people. It's the case for institutions. It's the case when you're talking about more and more nations trying to get out of the fiat system, which is a failure. I think once we all acknowledge that it's a failure, many of you have, but so many have yet to do so. And that becomes clear like the dollar index, right? You hear about the dollar rallying, and that's not really, it's up 5%, the dollar index or whatever. That's just relative to other currencies. That's not really, we're talking about value here. We're not talking about value necessarily. That's why inflation continues to go up with prices, inflating prices. Your dollar isn't getting any stronger. It's not buying you 5% more. No, it's just up 5% stronger than everything else. It's failing quicker. And I think we'll seek exposure to hedge assets like cryptocurrency. That's what it's all about. And, that's what this market was born out of. Anyway, so total liquidations were pretty crazy with Bitcoin over the last 24 hours. Most of that, as you can, this is the total liquidations over the last 24 hours, $385.83 million in this market. Insane. And most of that was people shorting to the downside, expectations that Bitcoin was going to drop. There was going to be a pullback. People were getting too excited before this inflation report release. And that seems to have been wrong here, as you can see. Although longs can get wrecked as well, just because of how volatile things can happen. And if people are trading on really tight leverage, we're talking like 100x, 50x, it's so easy to get liquidated, even if at the end of the day, the direction that you had thought would continue up. In the shorter term, you might get wrecked. So it's very dangerous to play with leverage. I had done this on GMX Exchange, actually, right around when I had posted that video talking about how I thought Ethereum was starting the bull market and the bull market was starting, which actually seemed to be right. I did open a position, a very like $1,000 position, silly position, to the long side, and that was in the profit pretty nicely, but I did close it out too early, sadly. I'm always like, I'm going to keep it open for the whole bull market this time and just see where it goes. But there's that other side of me that's like, I know that we're not just going to go straight to the moon. I don't have those delusions anymore as I might have had back in 2016, that things will just, all the money eventually will just pour back in as people become infected with the crypto virus. I've become a little bit more conservative and realized that things just waver, right? So better to take profits sometimes. But yeah, if we do get that pullback, it would be nice. Open some longs. No, don't trade with leverage, kids. Kramer set off the bull by calling sell. Yeah, it was probably Kramer, man. It was probably Kramer. Paul, what's up? How's it going? What's up, Wendell, Befuddled Hodler, Pothead, everybody else? Good to see you guys. So anyway, there is a potential, depending what you're holding, that there could be some sort of dump here. Here's Bitcoinist talking about FTX planning to sell altcoins worth $4.6 billion. So there was some news yesterday that from an attorney who reported at bankruptcy court that FTX had recovered $5 billion and they were going to be selling about $4.6 billion worth of those assets into the market. And that has been causing some concern. Although I don't think you really need to be concerned. It turns out that most of what they have is Solana. So I guess if you're holding some Solana, it could be bad. What is the Solana market cap right now? Let's check. They have about $700 million worth of Solana at FTX. Let's see what the market cap is. 6 billion. Yeah, I guess it would have some sort of material impact if you're holding Solana coin. Maybe that's why it's not up as much as everything else. So yeah, $700 million worth of Solana looks like it's been recovered. You have a $575 million in FTT that's been supposedly confirmed, $371 million in MAPS, whatever that is, $127 million in Oxy, WBTC, $90 million, $82 million Bona. I don't think this is enough to really hurt these tokens very much. And there's an Alameda wallet that Look On Chain, an on-chain analysis service, according to Bitcoinist, has been looking at. They've been looking at this Alameda receiving wallets that recently received $30 million USDC from Alameda Research 25 a few hours ago. And that wallet, which might be linked with FTX, they've been in bed in the past, $167 million. It has about 46.6 million in BIT, 41 million USDT, $31.8 million USDC, 17,177 ETH, but that's only $24 million, not that much. Really just a drop in the bucket for Ethereum here. 4.6 million Sushi, $5.2 million. So I don't think that this FUD is really impactful here. That's all I'm trying to say right now. It's plenty of room to run higher, even if it is these altcoins that could be affected by this sell. $5 billion is just not that much these days in crypto, especially when it's diversified across different assets. Anyway, Societe Generale, I thought this was interesting. So they're a French banking giant, as it says here, 138,000 employees across 62 countries. This is Blockworks.co reporting this. So they were finally able to withdraw $7 million from MakerDAO's vaults. It looks like DAI. It was what they withdrew, a stable coin. So this is a huge banking giant, and they're a TradFi giant. They're not really big in crypto, but it was seen as a huge nod toward MakerDAO, which is probably the first DeFi platform ever that started minting this DAI stable coin. It allowed you to lock up different tokens as collateral and then mint that stable coin in a nutshell. So they accept different cryptocurrencies. They have over time for multi-collateral DAI. So you have different options to mint that DAI into existence, in and out of existence. So one such asset that was used to mint DAI or to take out a loan was this new product that was created as a partnership with Societe Generale, Forge, which is the digital asset subsidiary of Societe Generale. And they were giving a $30 million credit in DAI following a vote. This was based on these OFH tokens that were created, tokenized securities on Ethereum that were primarily backed by home loans with Moody's AAA rankings, which made the loans over collateralized. But it's taken forever for them to actually pull out $30 million and prove that you could put some sort of real world like backed asset, some sort of security that's backed by real world assets into the blockchain, and integrate it and have this kind of marriage between TradFi and DeFi and so on. As I think a way to draw even more institutions, more banking giants into this and get more money into the space, more trust in this space. I think that's why most people had voted this in. Although, of course, there's the other side that this creates counterparty risk, that this no longer makes us as completely untethered from the TradFi system as once was hoped by the cypherpunks of crypto, although we're kind of far from those early ideals right now. I think there are those that still cling to that hope, right? Like Nikolai Masheghian. I had done a video on Nikolai and how he had passed away, sadly, in Puerto Rico. But he was one of those who still built out these kinds of DeFi products and believed in those early ideals. Some have put their own lives behind bars because of that, like developers of Tornado Cash and so on, behind these kinds of ideas. But anyway, so this has been very slow, according to Mika Honkasalo, which is a MakerDAO delegate and crypto researcher. He said he expects the bank to withdraw its $30 million in DAI versus the $7 million that's been withdrawn recently soon. He said, I'm not actually sure why it took them so long to use the vault, except that my experience with these real world asset things is that they always take a long time. Yes, they do. That's why we're trying to evolve this or revolutionize this whole thing forward, is to make things quicker and more seamless and more transparent. This essentially makes things slower, but again, early days is kind of like a pilot program, if you could call it that, and a pioneer product for others to do the same. And from a big trusted entity like Societe Generale, again, a nice nod toward crypto, I would say still. So overall, I would say it's nice. It's nice to experiment with this since the capability is available, and it was a vote, right? Anyway, this is something being talked about MetaMask. I don't think I've reported on the show, although I was tweeting about it last week or 2 weeks ago when this was coming out. I think it was Tevano on Twitter who had first made me aware of the situation. She was previously a founder of My Ether Wallet, a founder of My Crypto, and someone who really taught me a lot about Ethereum early on. But anyway, she had tweeted out about this idea, and MetaMask is tweeting about it as well, which is address poisoning. So we had spoken about there being these different address generators, whereby if you get tired of like 0x5236 exclamation mark hyphen punch in the face. No, actually, you wouldn't be able to write punch in the face there with this. Anyway, you a bunch of string of characters like a normal Ethereum address that just makes no sense. It's just jargon, whatever. If you got tired of those, you could go to an app or a website or a generator, whatever you would use. There were different ones that existed for a vanity generator that would allow you to create an Ethereum address that looked cool or might look like the name of your favorite sports team, or I don't know, might have your name in it. You could generate an address that was a little bit more vain. It looked a certain way and might be more appealing or easy to remember because of that, right? Like it might be starting with 0x coffee, like C0FFEE. But anyway, a lot of those, by the way, be careful. They turned out to suffer quite a lot of hacks. People who had generated an address got hacked for whatever reason. Those private keys seems to have been exposed, and people lost money because of some of those vanity addresses they generated. But those vanity addresses are being used against folks these days in a different way. So check this out. MetaMask support wrote, a new scam called address poisoning is on the rise. Here's how it works. After you send a normal transaction, the scammer sends a $0 token transaction, poisoning the transaction history. They use an address with the same first and last characters as the real transaction you sent in hopes you will not check the full address and instead copy theirs in a future transaction. You can protect yourself by double checking the full address or by using the address book feature. If you need help, menu support in app or from the website support.metamask.io. Start a conversation button and the chatbot will ask a few questions. Anyway, what they're basically trying to say here is that it's quite dangerous these days to post your address or even do a transaction publicly on the Ethereum blockchain in some ways. If you are somebody who goes to like Etherscan or a block explorer and looks at your, or even in your wallet and checks your last few transactions and without thinking copies the address that you had used to send to or whatever, and pastes it somewhere to send to it again and didn't do much diligence. You might have looked at the first few characters, checked if they were the same as one you might remember or you had used last time, checked the last few characters, bada boom, bada bing, copy, paste it, and done what you needed to do. Pull that information again from your wallet, Etherscan or whatever. But if you did that, you might have had your funds sent to the wrong place because a vanity address might have been generated that looked like one of those addresses you had used in the past. Or they had sent you, and basically they had sent you some sort of transaction that was like worth $0 or some very small amount, just so that you have that in your transaction history to copy from. And it was generated with a vanity address, so therefore it looked like yours, and you got hacked that way. So just be careful, double check everything. Don't copy and paste from your block explorer like that. You ideally would have your public address somewhere else to copy and paste from. And you might want to start memorizing some of those middle digits or alphanumerical digits as well as the first and last few characters of your address because of this going on right now. Just be very careful. Maybe check your addresses and see that you haven't gotten some of these transactions before you do anything. Just wanted to talk about that because this is kind of blowing up and more people are using funds because of this. It seems to be coming up even more because of that. Anyway, another bit of news is that Sam Bankman-Fried has come out to say his side of the story via a Substack newsletter that he is apparently charging $80 a year to access. Here it is. He talks, of course, about how he never stole customers' funds. He doesn't have those customers' funds on the side. He basically talks about how they did not hedge their bets enough, Alameda and FTX. That was the big problem here. They had a bunch of shit coins, like the shit coins that they printed out of thin air, FTT, when they should have hedged into something like Bitcoin and Ethereum sooner. It took them way too long to do that. And you had all these different companies going down like Celsius and Voyager, and they were just so late. They were a little bit too cocky. They needed like a 94% drawdown, which is what they basically got to in the market before they would have really suffered here because they were just so strong, but they were not collateralized enough, yada, yada. Here it is, Alameda. In the 2022 market crashes, Alameda entered 2022 with roughly $100 billion of net asset value, $8 billion net borrow, 1.06% leverage. I'm sorry, times leverage, tens of billions of dollars of liquidity. Then over the course of a year, markets crash again and again and again, and Alameda repeatedly fails to sufficiently hedge its position until mid-summer. BTC crashes 30%. BTC crashed another 30%. BTC crashed another 30%. Oh my God, how did this happen? This has never happened before. Oh my God, Bitcoin crashing after a bull run. Oh my God, these noobs, man. It gets me so upset. He thinks he can come in here from like some whatever Wall Street experience and just dominate the whole market and expect that everything's going to be fine, really, and that things are just going to continue to go up. What an absolute noob. Oh my God, the karmic retribution, if such a thing exists, that happened here. Anyway, rising interest rates curtailed global financial liquidity. Luna went to $0. Three Arrows Capital blew up. Alameda's co-CEO quit. Voyager blew out. BlockFi almost blew out. Celsius blew out. Genesis started shutting down. Alameda's borrowing liquidity went from $20 billion in late 2021 to only $2 billion by late 22 again. So Alameda's assets get hit again and again and again. But this isn't specific to Alameda's assets, whatever. Yeah, at Bitcoin, Tesla, Ethereum, everything was down on the year. Or where was it here? Yeah, anyway, they finally, in the summer of 22, Alameda was when they finally put substantial hedges in some combination of BTC, ETH, and QQQ. If they even had that, because I've read they didn't even hold these assets right till when they went down. They had basically sold a lot of Bitcoin and Ethereum that customers deposits, and they didn't really have that on available for demand, of course. So anyway, this is just him trying to talk about and clear his own name, of course, with everything that he's dealing with. And I guess, I don't know, it's quite ridiculous. The Coda, he thinks that FTX customers could have been made whole. Maybe FTX International customers could have been made whole if he was able to just scrounge up enough cash. But oh no, he was going to tell this to the Department of Justice at a hearing, but then, at the Senate hearing, but then he was arrested the day before. Oh no, he wrote out what he was going to write out on the testimony and shared it here. You can read it for yourself, parts of what he was going to say. And the reason that customers FTX US haven't had their assets back is ridiculous to him, because they were completely whole and they were way more regulated than FTX International, which he thinks could have been. I don't know. The guy seems quite delusional to me, but I guess you can read it for yourself. Arthur Hayes had this to say. Guess you want to keep playing. I'll keep dunking. Very entertaining read. I'll be back with some thoughts. They're probably not going to be the best of thoughts or the most supportive of thoughts. He's probably going to shatter some of this, at least somewhat, considering how Arthur Hayes writes. But anyway, let me know your guys' thoughts. That's one of the most talked about things in the news today is Sam Bankman-Fried and his new Substack newsletter. That he's out there talking about right now. Something else that's in the news is that Samsung is getting ready to launch their ETF. Sadly, most people who watch the show won't be able to access it unless you have an account in Hong Kong. It looks like in Hong Kong, in their stock market, this will be trading a Bitcoin futures product. So it's the Samsung Bitcoin Futures Active Exchange Traded Fund, an ETF that seeks to follow the performance of Bitcoin, spot Bitcoin, as closely as possible by investing in the Bitcoin futures products that are listed on the Chicago Mercantile Exchange or the CME. So this isn't going to be putting a real bid except for some sort of hedging situations, a real bid on Bitcoin. I still think that the holy grail of ETFs are the ones that buy spot Bitcoin and actually hold real Bitcoin versus following some sort of price that's dictated by futures traded somewhere else that are just paper. It's like what you see with the gold and silver market that is supposedly heavily manipulated and so on, where it doesn't really so much help the spot market when you see most trading happening on these futures markets. But still, at least it's an option for investors to get some sort of exposure, I suppose. And this is the first and the only Asian ETF that is going to be following the performance of Bitcoin or some sort of performance of Bitcoin. It says here on edaily.co.kr, Korean news. So there you have it, folks. I hope you've enjoyed the show. I hope you'll continue to show up in the future. Thank you so much deeply, as always, to the Patreon and YouTube sponsors who keep me coming back and able to make any sort of content for you guys. Anything you guys can do to help is always appreciated. Even if it's just a like button or subscribe or sharing the video on Twitter or somewhere else. Really, really thank you for that. If you've enjoyed it, I hope you'll also enjoy our quote of the day, which we always finish off with here. Here's one by Dale Carnegie. Most of the important things in the world have been accomplished by people who have kept on trying when there seemed to be no hope at all. I know crypto has been dead on social media, but so many of you have held on. And for me, this quote actually even more resonates with the cypherpunk idea, which I think is still an active kind of war. It's not even a battle that happens, which is TradFi, traditional finance, and these investment banks thinking that crypto is just some sort of joke, some sort of game, not really the foundations for a new society, because money is so important to every single person. Having a foundation of good money, decentralized money, which gives us a say, I think is integral to the future that will benefit the most people in society, rather than just a few elite at the top who dictate and hand down from their ivory towers how we will live our life and how we live as financial slaves now versus just shackled slaves that so many did in the past, and so much else. Anyways, true freedom, I think, is being offered by very few innovations in modern society, as you see with cryptocurrency. So thank you for hanging on to that fight, so many of you with me, and I'll continue to support that view with a little bit of more bias in that direction, rather than just going back to how things have been on this show. So take care, everyone. Much love and stay cryptic. Peace.